Ladies and gentlemen, thank you for standing by. Welcome to the fourth quarter 2014 Rhino Resource Partners Earnings Conference Call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will be given at that time. If at any time during the conference you do require operator assistance, please press star and then 0, and an operator will be happy to assist you. As a reminder, this conference is being recorded. I would now like to turn the conference over to your host, Scott Morris, Vice President of Investor Relations. Please go ahead.
Thank you, Emma, and good morning, everyone. The earnings release was issued before the market opened this morning and is posted at the partnership's website at www.rhinolp.com. Participating in the call today are Joe Funk, Rhino's President and Chief Executive Officer, and Rick Boone, Executive Vice President and Chief Financial Officer. Before I turn the call over to Joe, I want to make a few general reminders. Our call today may contain certain forward-looking statements that are subject to a variety of risks, uncertainties, and assumptions, which are described more fully from time to time in the partnership's filings with the SEC. We refer you to those sources for additional information. Forward-looking statements are based on management's current expectations and assumptions, and actual outcomes and results may differ materially due to various factors. Rhino expressly disclaims any obligation to update or revise any of these forward-looking statements, whether because of future events, new information, a change in its views or expectations, or otherwise. A replay of this call will be available, and instructions for accessing the replay are included in today's earnings release. The webcast of today's call will also be archived on our website for 1 year. With that, I'll turn the call over to our President and CEO, Joe Funk. Joe?
Thank you, Scott. I'd like to thank those of you who are participating in the Rhino Resource Partners fourth quarter 2014 earnings call. Our board maintained the distribution at its current level, preserving the liquidity of the partnership as a prolonged weakness in the coal markets continue to adversely impact cash flow. We continue to adjust our production and cost structure to align with current market conditions. In the fourth quarter, we performed a comprehensive review of our coal mining operations as well as potential future development projects. We identified various projects, properties, and operations that were uneconomical to pursue or maintain due to the changes in our strategic plans, market conditions, or other factors. Based on these ongoing reviews and changes in our strategic plans, we recorded approximately $45.3 million in non-cash asset impairments and related charges during the quarter, as well as an additional $5.9 million impairment charge related to our Rhino Eastern joint venture. We believe these actions, along with our continued focus on cost and productivity improvements at our ongoing core operations, will enhance the liquidity of Rhino while retaining the flexibility to continue exploring non-coal investments, which we believe will enhance our long-term value of the partnership. For the first quarter of 2015, we expect adjusted EBITDA from continuing operations to be approximately $4 million, which is an improvement over the fourth quarter results. Our priorities for 2015 will be to preserve liquidity, continue controlling cost, only pursue capital spending with strong justification, and maintain our excellent safety record, all while responding quickly to changing and challenging market conditions. Our balance sheet remains strong with relatively low debt levels and low legacy liabilities. Since completing the sale of our Utica oil and gas interest, we have kept debt levels relatively low with approximately $54 million drawn on the bank line of credit at the end of the quarter compared to $167 million at the same point last year. We currently have no significant planned growth capital expenditures, and the investments to develop Pennyroyal are nearing completion. We anticipate cash flow to grow at Pennyroyal and expect costs to improve at Hopedale. During the fourth quarter, the difficult market conditions that continue to affect nearly all coal companies adversely impacted our results. Conditions remain weak in all served markets with excess supply and low natural gas prices weighing heavily on coal. At Hopedale, poor rail service continued to constrain shipments from this operation while costs remain high due to intermittent adverse geological conditions encountered in the advancement of the new seven-seam reserve. In addition, productivity was lower and costs were higher than anticipated at our new Pennyroyal mine due to coal processing issues and geological conditions that we are working through as the mine continues its ramp-up. Sales volumes were strong during the quarter at our Castle Valley operation, and we have completed additional long-term sales agreements through 2016 for coal for this operation. Our Pennyrile mine ramp-up production during the fourth quarter, and shipments were made to fulfill our 800,000 ton per year contract. We are on the final stages of completing a long-term sales contract with another local utility customer for 120,000 tons in 2015, 400,000 tons in 2016, and 550,000 tons in 2017. We have added a second mining section at Pennyrile to increase production capacity to fulfill the long-term sales contracts. We received permission for a deep-cut mining plan, which will help improve productivity and lower cost. Pennyrile gives us additional diversification, and we expect it to be a significant generator of stable cash flow as it ramps up to its full potential run rate of 2 million tons per year. Our Castle Valley operation is sold out through 2016, while our Hopedale and Sands Hill operations in northern Appalachia are sold out for the remainder of 2015. At Pennyrile, additional test burns may lead to additional sales contracts, which could bring this mine to its full potential run rate of 2 million tons per year. Market conditions in central Appalachia have remained challenging, with continued depressed met and steam coal prices weighing on producers. In central Appalachia, we have remained focused on safe operations while keeping costs as low as possible with reduced levels of production and sales. We dissolved the Rhino Eastern joint venture in January 2015 due to ongoing weakness in the metallurgical coal market, which had caused the joint venture to become unprofitable and a source of significant cash outflows for us. We anticipate the divestiture of this Rhino Eastern joint venture will improve the partnership's cash flow by approximately $6 million in 2015. With that, I'll now turn the call over to our CFO and Executive Vice President, Rick Boone, for the review of the financials. Mr. Boone?
Thanks, Joe. Good morning to everyone, and thank you for joining our call today. As Joe mentioned, Rhino continues to maintain a relatively low debt level as we finish the quarter with $54 million drawn on our bank line. At December 31, 2014, Rhino had total availability of $127.3 million, which included cash of $0.6 million and available credit under our facility of $126.7 million. With our recent quarterly figures at lower levels, our liquidity in future periods could be as adversely impacted. Looking at results for our operations, total revenue for the quarter was $61.9 million, and coal revenues totaled $52.5 million, both slightly down from Q4 2013, but up sequentially from Q3 of 14. Other revenues for the quarter were slightly lower at $9.4 million compared to $10 million in 2013. In the fourth quarter, Rhino incurred a net loss of $61.3 million, which included approximately $45.3 million of asset impairments and related charges, as well as an additional $5.9 million impairment charge related to the Rhino Eastern joint venture dissolution. Adjusted EBITDA for the quarter was $2.2 million, which was impacted by the operational issues that Joe discussed earlier. Coal revenues per ton decreased quarter-over-quarter and year-over-year due to the lower price of metallurgical and thermal coal at our Central App operations, as well as a higher mix of lower price tons from our Western and Northern App operations, as well as the initial sales from our Pennyrile operation. On a per ton basis, coal revenues in the fourth quarter 2014 were $53.80 per ton compared to $63.69 per ton in the same period of 2013, a decrease of $9.89 per ton. As Rhino transitions production and sales away from Central App and more towards Northern App and the Illinois Basin, our consolidated revenue and cost on a per ton basis are somewhat skewed when compared to historical periods. Cost of operations per ton was $55.83 per ton in the fourth quarter of 2014 compared to $52.50 in the fourth quarter of 2013. The increase in cost of operations per ton year to year was primarily due to the increased cost that Joe mentioned earlier. Rhino's maintenance capital expenditures were $2.9 million for the quarter, while expansion capital expenditures were approximately $1.8 million, which consisted primarily of payments for the final development phase at Pennyroyal. With that, I would like to turn the call back to Joe for his closing remarks.
Thank you, Rick. We are focused on improving our future cash flow and maintaining our liquidity. We continue to have a strong balance sheet that provides us the flexible position to operate our business during a period of depressed prices. On behalf of the board and employees of Rhino Resource Partners, I thank you for your participation today. Emma, please open the call for questions.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star followed by 1 on your touch-tone telephone. If your question has been answered or you wish to withdraw your question, press star followed by 2. Press star 1 to begin. Please stand by for your first question.
Emma, it appears that we have no questions today, so with that, I would like to thank everyone for their participation, and we will speak to you again next quarter. Thank you.
Thank you for your participation in today's conference. This does conclude the presentation. You may now disconnect. Good day.